Hello, this is Rich Posson. It's September 16th, 2018, with an update on the NAREIT Index. This is an index of REITs, Real Estate Investment Trusts. You've seen this chart before. It's an annual bar chart, and I was bearish earlier this year with this opening lower and then sharply trading lower. But now look at the recovery that began from a low made in April. And it looks like some economic indicators have made some lows as of May. However, there's pockets that don't look so well, and the global economy still has pockets that don't look so well. But there is something going on here that has returned, investors have returned, in other words, to looking into real estate. There was even news of the BlackRock company launching yet another real estate fund, multi-billion-dollar fund, and they were doing quite well raising the money. It sounded like it was easy to raise the money. So we have to be considering that it has recovered above this trend line of these annual lows, and that it's moving on up into a 3-year cycle, which can be 3 or 4 years. So it should peak next year, the latest for that type of cycle, and it could peak any time from now to the year end. And I've also labeled some of the 3 years in the past here. Now, this 3-year cycle, which also relate to the kitchen cycle and that economists use, that 3-year cycle actually is a component of the larger 9-year cycle that you can see topped out in 2007, rallied back, and 2016 was the first year that I had projected for a top. And the last year can be as late as 2021. If you're using the economy as a guide, really the economy should peak no later than 2020. So I would think real estate wouldn't peak any later than 2020. And I just said we've got a 3-year cycle that ideally will peak no later than 2019. I'm starting to think maybe real estate and crude oil peak ahead of the economy and the stock market. Okay, so let's a quick rundown of some of the cycles. You can see a 9-year cycle. And the reason some of these 9-year cycles are more violent or volatile than others is had to do with super cycles, something larger than the 9-year cycle. And what I'd like you to think about, if it takes out this year's low at 184.30, that's a bearish sign, and it doesn't have to bottom out to as late as 2021, which is also the latest year for a recession to bottom. And although I'm allowing a 20-30% drop in the stock market, and real estate could drop that much, and I'm even allowing as much as 50% in the stock market, have to consider back in the early 1980s, there's about a 16% drop for the 9-year cycle, one of the smallest declines off the 9-year cycle. So we'll also have to consider maybe there isn't such a serious bear market, and the super cycles are probably up from the 2009 low and the 1930s lows into the 2030s for real estate. However, the 9-year cycle should still show up and still make an impact once or twice per decade. It should be a primary recession, and real estate should have a correction. And I have to be bullish now, have to back off in the bearishness, but I don't see any signs that tell me just to be bullish for the next 5-7 years. I say you got to have that recession, you got to have that pullback. Then I'll be bullish for about 7 to 12 years, at least for the economy and the stock market, if not real estate. Hope this is useful. Thank you.